You are listening to chartingwealth.com for Thursday, the 9th of August, 2018, as we look at the markets at the close of the day on Wednesday and go into Thursday, the 9th. We see that stocks are mixed. S&P 500 down just a little bit. The Qs, that's the NASDAQ 100, up just a little bit. TLT actually up just a little bit, and gold up 0.28%. Now we always jump in on our weekly chart, and we go first as always to the S&P 500. And what do we see? We see things, well, still going up as far as our Heikin Ashi candlesticks on the weekly chart, gaining upward momentum, price percent oscillator heading up, have a nice strong candle, derivative oscillator gaining momentum. So as we go from the weekly to the 2-day, what do we see there? Well, that 2-day candle is a nice strong candle, the biggest candle we've seen since going back to the 25th of July. So again, price movement well above the 2-day and the weekly trend line. Derivative oscillator is pretty much flat, and the price percent oscillator heading up. Now we go into the really close view, the closest view we typically get on the 2-hour or 4-hour. We typically stick with the 4-hour candle. What do we see? A little bit of down movement in the morning, up movement in the afternoon, our Heikin Ashi candlesticks. Price percent oscillators pretty much flat. Derivative oscillator losing energy. So again, keep your eye on the prize. We've done okay so far with some up movement, but don't let this market sag and really start to drop on you and lose the bit you've gained over the last couple of days. Now, again, just keep your eye on that 4-hour chart if you used it to jump into things when we had that crossover going up. We had that happen on Friday afternoon and had an entry point there on Monday. So just be careful. Keep your eye on things. The market might just be letting off a little bit of steam, catching its breath, getting ready to head up again. Again, the way things ended for the day, we had, I would not call that a doji or really necessarily a spinning top. We had a spinning top in the morning with some indecision, but then it peaked on over going up. So just keep an eye on things as the market opens in the morning. See how things look on Thursday. Back to the weekly chart and going to the Qs. Now the Qs was up for the day. The S&P 500 down 0.06%. The Qs, the NASDAQ 100, up 0.06%. We see on the weekly chart a green open box candle, which means nice movement up so far for the week. Derivative oscillator gaining momentum. Price percent oscillator heading up. Price movement is below the prior candle. Of course, we can try to redraw that at any time because we do have a green up candle and things on the price percent oscillator are up. So, of course, price movement is up. We go from the weekly to the 2-day. What do we see there? Well, the 2-day has actually closed at the end of the day. We talked about this yesterday because of the change in the 2-day candle. We actually do have a crossover going up, so we're going to move our 2-day vertical crossover over. Now, this is not the strongest of crossovers. Why? Well, it's not a super strong crossover and super clear that it crossed. It did, but we don't have the derivative oscillator heading in the right direction yet. It is still negative, even though the price percent oscillator crossed over going up. If there's a big down move on Thursday, then of course it can easily pull this back over going down. So we'll just keep our eye on things. Go ahead and make that change because it did actually occur. We'll just see if it lasts. And then on the 4-hour chart, what do we see? Down movement in the morning, stronger up movement in the afternoon. Derivative oscillator losing momentum. Price percent oscillator still in the positive. So we'll keep our eye on things. Now that we have the 2-day chart going in the right direction, we're going to wait for a pullback on the 4-hour before we jump into an up trade there. I mean, if indeed that does occur. That's where we are on the Qs. Going from the NASDAQ 100 to TLT, 20-year Treasury bonds. What do we see going on there? Well, as we look at the weekly chart, it looks like we may end the week with a crossover going down. Hasn't happened yet. Market was up a little bit for the day. We do have a green closed box candle. Again, not a strong upper open box candle, but a closed box candle. But again, it's not red, so it is positive. We'll just wait and see. Derivative oscillator still negative. Price percent oscillator appears to be crossing down. Remember, we can't call that until the candle closes, and that doesn't happen until the close of business on Friday. What do we see happening on the 2-day chart? Really a sideways slide tending down with that last red candle. However, derivative oscillator losing downward momentum, but that price percent oscillator still spiking down pretty strong on the 2-day chart. Go from the 2-day to the 4-hour, and we see, of course, down in the morning, a little bit of a rebound in the afternoon. And again, these are Heiken Ashi candlesticks, means average pace. So don't get confused by them if you're used to the standard candlestick, open, high, low, close. We've got a great training, #1 on the internet, 80-something thousand views. So please check that out. Heiken Ashi, Heiken-ASHI, means average pace in Japanese. Look up our training, find it at the website, YouTube channel, all over. But what we see happening, of course, is derivative oscillator losing momentum. Price percent oscillator pretty much flat. So we'll just continue to see how things shake out on 20-year Treasury bonds. Don't have a trade right now, but if we have a weekly vertical crossover going down at the end of the week, we will let you know for a potential short position over the course of the next week. And we talk about all these things in our book, Charting Your Way to Wealth. Hope that you will purchase it. You'll find links everywhere at our daily market review, at our website, under the daily market review, the email subscriptions that many of you receive. And again, that's free. Sign up at the website and also at our YouTube channel under the show notes. Same for those of you listening on iTunes. There are links under the show notes to purchase the book. Okay, that's where we are as far as TLT 20-year bonds go. Lastly, we go to gold. Gold continues down. That was up for the day 0.28%. In fact, it was the biggest move of the day in all 4 of the ETFs that we look at. Gold was up 0.28%. Still a red down candle. Derivative oscillators lost a little bit of its downward momentum. Price percent oscillator still headed down. We go from the weekly to the 2-day. What do we see? Again, a red down candle. However, derivative oscillators losing momentum. Price percent oscillator appears to be headed up. So keep your eye on things there. What's up with the 4-hour chart? Well, it was down a little in the morning, crossed over going up in the afternoon. Derivative oscillators gaining momentum. Price percent oscillators heading up. It's really been sliding sideways for the last 2.5 days. So keep your eye on things. Let's see what gold might do. Remember, still in confirmed down moves on the weekly and the 2-day. So we don't have a move on gold at this time, but maybe gold's reaching a bottom. Maybe. If it does, we'll look to see it. Okay, we'll keep our eye on things, and it has hit around here before, both back sometime around July of last year, and then again sometime around March, mid-March of 2017 also. So who knows? Might be a floor. We'll keep our eye on things and just see what we see. Okay, that's where we are as we end the day on Wednesday, go into Thursday. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.